Hello, it's Dinome. In this video, I'm going to explain to you what will happen in the next few weeks, few months, and over the year. What will happen to food prices, what will happen to your savings, what will happen to asset prices based on the simple law of supply and demand. So now everybody already knows that we have a crisis in hand. And it's not only one crisis, it's actually multiple crises stacked into one time frame. So it can be a little bit complicated to understand, but let me explain to you using the trusted Paint app. So before the crisis, let's imagine we had this amount of supply of goods and services in the world and this much demand for all of those goods and services. So they were in equilibrium. Let's call this ratio 1 to 1. And what happened at first because of the virus and the crisis is that we saw something like this happening. So the total supply of all goods and services actually went a little bit down because the supply chains got disrupted. The stuff that you usually got from China or the manufacturers got from China stopped coming. There were not cargo ships sailing across the world, nothing like that. So the supply got a little bit lower, but the demand was still there. So if you wanted to buy stuff from here, because the supply was lower, the price of those goods that were in limited supply actually got higher. But then happened something interesting. We got a demand shock because of the crisis, because uh, people started to fear that the virus can get to into can get to into their home country, and they need to shelter themselves from the virus, and they might lose their job and stuff like this. The demand in the world went super small, something like this. People stopped traveling, people stopped buying convenience, people stopped buying luxury. They just wanted to buy necessities. And you can see this when we had the grocery store runs, people were hoarding toilet paper, hand sanitizer, masks, all the necessities for this crisis. And the price for necessities went up because the demand for necessity got higher, but the demand for all the luxury stuff that we're still supplying, people don't want to buy luxury anymore. So gyms, they you have a lot of gyms that are just empty. People don't want to go there because they don't want to get the disease. People want to travel. There are travel bans. So the demand is very low currently. So this is very bad for the economy because when people don't have demand to buy things, the economy stops working. So companies that provide all of these goods and services, because they don't have customers, they cannot pay their employees and they have to fire their employees. And if you don't have income anymore, how are you going to survive? So now governments, they want to do something like this. They want people to start buying again. They want to expand the demand bubble here higher, so it's more aligned with the supply that we currently have. And they want to do this by transferring wealth from the middle class to the poor people, because they don't want people to riot, they don't want people to starve, so they will create money out of nothing. So let's draw here another bubble. So this was the currency supply in the world before the crisis. Let's draw it. Uh, let's try to draw it close to the other one. It's not going to be a perfect perfect picture, but I hope you'll get the point. So this was the money supply in the world. Now that the people stopped using money, the money supply is still there, but the poor people don't have money. The middle class, they have savings, but companies nowadays, they are over leveraged with debt. So companies are going down, everything is like halted in the world. So governments are now interrupting the thing, and they want to expand the money supply so they can send money to poor people and struggling people. But here's the thing, when you expand the money supply, but the supply for goods and services is still the same, the price of all of these things will go up. So if you are middle class or you're rich, your savings will lose value. So if you have a lot of money in savings, you should consider buying something that has limited quantity that you can store and sell later for the increased monetary value. So, for example, a lot of people are now discarding gold and silver and Bitcoin. The price of them has gone down because of uh, the panic that has happened and the supply and demand shift from that panic. But when you increase this monetary supply, Bitcoin, gold, silver, Ethereum, they still have this amount in the world. It will not change. You cannot create more gold instantly. You cannot create silver out of nothing. And Bitcoin, it has 20 million cap. You cannot create any more Bitcoin. So these are still the same. You cannot affect that. So what will happen when this amount of money, people are figuring it out like, okay, governments are making money, but you can buy less and less things each week with that money. But here is an asset that is limited. So they will go up in price because of supply and demand. This is when Bitcoin, gold, and silver start going up, when this money starts flowing in to this asset class. And this is what we will see in the next year or two. And that's just my prediction based on supply and demand. But I hope this picture helps you understand the situation. If you like this explanation, you can support this channel by downloading Brave browser, which you can actually use to earn money just by browsing the internet, and you will not see as many ads, and it protects your privacy better. So if you want to support this channel, download this browser. It's awesome, and you can have all the same extensions as you have in Chrome. And that's it for this video. If you have any questions, please ask, and of course subscribe to the channel and hit the bell for notifications if you want to have more simple explanations like this one. And I'll see you in the next video. Cheers.